Welcome to the Daily Brief, where I'll go over the highlights in the market for Wednesday, September 7th, and then see how things look for Thursday, September 8th. And we had a pretty nice bounce, but we have to ask the question, was this just a short-term oversold bounce? Has the picture really changed, or are we going to still continue to be negative even after seeing this nice bounce in Wednesday's session? So let's go back and talk about what happened. At the open, we had a higher open and prices climbed to R1, and that's a typo there. It should be 39.38. No, the S&P did not climb 1,000 points or decline. As the day went on, buying pushed prices higher to above R2 at 39.68. And then going into the close, we were just slightly off of the high for the session. So it was a pretty solid day. We ended up being up 1.83%. Volume was slightly above average, not very much, but just a little bit above. So we're seeing some more volume coming into the market now. The technicals, they're still negative overall. We kind of have to draw that whole conclusion, but on a short-term basis, we had become oversold, and we kind of have to treat this as just an oversold bounce at this point, where inflation and interest rates and growth concerns, that's the fixation of the market now, with a lot of the geopolitical concerns, including the Nord Stream pipeline, which according to the press secretary at the White House, that's what it's called. But that was kind of funny to hear that. And then earnings that are being released by the companies. We still have the debate going back and forth about whether or not we're in a recession. And then we did have some Fed speak come out on Wednesday that I'll talk about here in just a moment. So was this only an oversold bounce? We kind of have to take it as that for right now. The technical picture really hasn't improved all that much. Now, it could morph into looking more positive, but we didn't see a real washout bottom. Sentiment is still not really excessively fearful, and we're just kind of having to take this as, well, yeah, we were going down, and this was the chance for the market to bounce up a little bit. The headwinds that have been hitting stocks, they subdued slightly on Wednesday. And please be reminded, it might be old news by the time you watch this video, the ECB will be meeting on Thursday concerning interest rates. So we'll be keeping an eye on that, and that might have some impact on the US session. The S&P did find support at 3,900 and that trend line that we've been watching. And so it's held up so far, but can it continue? Now we're above that currently, but if we start to come back down, is 3,900 going to hold? Is that trend line going to hold? We'll be keeping an eye on that. And all of our sector rotation, our setups, our scenarios, they're still on hold. Nothing has really changed, even though we saw a little bit of an improvement with those charts. And we're wondering, will new signals be generated if we continue to fall? And here is some of the Fed speak, where the Fed Vice Chair Bernard indicated that rates will need to rise further. Okay, that doesn't give the market an awful lot of hope. But on the other hand, to see the market going up after statements like this are made, it's kind of positive, but the market seemed to be due for a bounce anyway. And then Cleveland Fed President Mester, who we talked about last week, just restated that rates will need to be taken to a restrictive level, and that she does not necessarily anticipate any kind of rate cuts in 2023. That could be taken as quite negative. On a positive side, it's not Fed Chair Powell who's making these statements. Even though these people are important and they do vote, the chairperson is the one that the markets really pay attention to the most. The 10 to the 5 and the 10 to the 2, they still remain inverted as far as their yield curves. Interest rates and the dollar are still having a pretty strong correlation. I have to clear my throat. Sorry about that. And I took oil off of this list because we're seeing oil just kind of going more in the same direction as stocks right now. Sentiment is turning more fearful, but it's not extreme. We're still kind of tilted over towards the fear side, but we didn't have an excessively fearful situation before we saw this bounce, which is another reason to suspect that this is anything more than an oversold short-term bounce. The reports that came out are the weekly mortgage applications index. They continue to decline. They were down 0.8%. And the trade deficit narrowed to 70.6 billion. They expected it to be at 70.2 billion. Again, neither one of these are really big in and of themselves, but we like to keep an eye on this because it gives us a general idea of what's happening in the economy. As far as our trend, it's weakening just a little bit. With the up day, the ADX turned down, but it's still above 20, and the red line is still on top. So we still have to go with the negative trend. The bias right now, because of the up day, and it was a pretty solid up day, I switched over to positive, but I'm keeping the momentum at mixed to negative. We need to see more follow through for the whole environment to change. So what's our outlook then for Thursday? The technicals are negative and bouncing from being short-term oversold. We have jobless claims and consumer credit coming out. Not really big ones. We'll keep an eye on jobless claims, but this is a weekly report that we get. So we'll have to see. Will we see some follow through buying on Thursday? And we have the whole list of geopolitical events with the lockdowns continuing in China, but the markets are mostly fixated on inflation and interest rates. We might get some more Fed speak, and there's still this debate going back and forth about whether or not we're in a recession and just what is a recession. Our scenarios, we still have to go with the down scenario because of all the headwinds that are hitting the market currently. The technicals are negative, but so far the trend line has been holding up. It's still below current prices, and we're bouncing from a short-term oversold condition. Will that continue? We can't really go with a positive scenario because we don't know if this bounces for real, even though the support has held so far and some of our charts showed some improvement. We didn't really see that washout that usually comes before we see a nice bounce. Now, this could change. This could keep going higher, and we will adjust if that is what ends up happening. Our scenarios, our rotation, our setups, all of those continue to be on hold. Some of those charts improved a little bit in Wednesday's session, but they're going to have to improve a lot more. And the technicals are still negative overall. We're still below the moving averages that I tend to follow the most. And we can't really say that we're sideways because the ADX is still above 20, even though it is weakening slightly, and the red line is still on top, so it is negative. So our conclusion then is that the S&P is negative. Short term, it's negative and bouncing from being oversold. Intermediate term, negative. And if we continue to drop, the intermediate term may become more oversold. And long term, we still remain negative. So thank you. If you want to see the charts and my analysis and commentary, please check out the full-length video. I'm unsure if I will do a full-length video for Friday's session. I'll just have to see how things play out on Thursday.